You're now listening to the Tax Smart REI podcast, the number one tax podcast for real estate investors. Hey, thanks for tuning into this week's episode of the Tax Smart REI podcast. Today we're joined with Dr. Jeff Anzalone, aka the Debt-Free Doctor, to discuss how doctors and professionals can achieve financial freedom and buy back their time by investing in real estate. Today we cover Jeff's journey from full-time dentist to achieving financial freedom through real estate investing, what types of investments to consider and how to get started, what investments Jeff is focusing on in 2024, future market outlook, and much more. Whether you're a doctor, busy professional, or a business owner, this is an episode you do not want to miss. We'll be diving into all of that in just 1 minute. Hey, are you an investor looking to slash your tax bill? Then get ready to discover everything you need to know about the short-term rental loophole to save up to 5 to 6 figures in taxes with our comprehensive STR task course. Valued at $247 is now just $1 for a limited time when you sign up for our Tax Smart Insiders community. Here's what you'll get when you sign up. Learn tested methods that have helped thousands of investors maximize their tax savings, get expert guidance and support from our team of real estate CPAs, and enjoy unlimited access to the course materials. Don't miss out on this incredible limited time offer. Visit www.taxsmartinvestors.com/free STR course to enroll today. Again, that's www.taxsmartinvestors.com/free STR course to enroll today. We'll see you there, but for now, we'll dive right into today's episode. Hey, Jeff, thanks for taking the time to join us for the show today. Before we dive right into today's topic, financial freedom and buying back time for real estate investors, would you be able to give us a brief overview of your background and how real estate has impacted your life for those who may not have heard previous episodes?
Yeah, I'll start from when I got out of dental school and my residency. I was under the impression that I was a Dave Ramsey way. I did the baby steps. That was a great foundation, pay off all your debts, smallest to largest, get started with the 401k and live happily ever after till you're 70. And I was on that path. But about 10 years after practice, I had a snow skiing accident and I hurt my wrist. And that was really my wake-up call to like, man, if I can't use my hands as a dentist, I'm screwed and I can't provide for my family. So that led me to start looking other ways to build wealth. And what I noticed was kind of like anything in life, everything that I had learned beforehand was completely wrong. Kind of like, well, you want to get healthy, you want to get in shape, you want to know what foods to eat. Pretty much everything that they've told you to eat is wrong. I mean, I know that you can attest to that, Tom. You've cut up and you've lost a lot of weight and you look great, but you probably eat a lot differently than you used to, right?
Oh, no, for sure. For sure. What they tell you is definitely wrong.
Yeah. So what I learned from wealthy people was they don't say, I am a doctor, I am a dentist, I am an accountant. They say, I own businesses, I own real estate. They're owners. And they also, the majority of them invested in real estate. And here's the kicker for me. The majority of them had anywhere from 7 to 10 income streams. And I'm like, who does that? I'm a dentist. I have one good income stream. But again, I learned all of this stuff along the way. And that was my wake-up call, which eventually led me to investing in real estate more passively and along the way, learning about the unbelievable tax benefits that come with it, which I learned a lot of it. I've learned from you guys at the realestateCPA.com, and then networking. And now I'm transitioning out of my practice and teaching other doctors and dentists pretty much how to do the same thing.
That's awesome. It's so true. You can't rely on one income stream. You never know what happens. And a lot of times people do have multiple income streams. And I think there's like a statistic out there, like 90% of millionaires invest in real estate or became millionaires through real estate. So definitely a pillar. And I know that's how I got into it too, because every book I read, real estate was a common theme. I know that you help people achieve financial freedom, build passive income.
That was it right there. That's the book that got me started, The Purple Bible.
Same there. Rich Dad, Poor Dad. It was the book that set me on my path as well. So if you guys haven't read it out there, you have to pick that up. It's like a must read. In terms of financial freedom, I know you help doctors and others get there. What does financial freedom mean to you?
Financial freedom, what it means to me, there's all kinds of different definitions. But for me, it means that the typical dentist and doctor, they can take maybe 1 to 2 weeks vacation a year. And that's it. And it's not because they can't afford to take they can afford the vacation. Let's say you're going to go on a ski trip and it's like 10 grand. Well, most of them can afford that, but they can't afford to be off longer than that typically because the overhead still needs to be paid. The practice, the business, the employees, all the things that go on. So to me, that's the kicker right there. That was what really wanted me to focus on getting to the point where I could take off a week I could take off a month. I could take off a year, still have cash flow coming in to support my lifestyle. So to me, financial freedom is you have enough money coming in to keep the lifestyle that you're living without you having to physically go trade time for money.
I think that's a pretty common way to look at financial freedom. Obviously, we're focused on real estate as a firm, and you own some real estate. Talk to us, and maybe as you're talking to the listeners, like how does real estate specifically kind of play into that? You talked about income streams and so forth. Like, how does real estate play into that financial freedom piece?
Yeah, it does so many different things, just besides freeing up your time, but really taking the stress off of you. And you treat your patients, you treat your clients, you treat your customers, you just have a different mindset. Because if you're so focused on, I got to close this patient, I got to close this customer, I got to have this deal, and that's my only income source, you're stressed out. And I was like that for a lot of my career. Versus you go into your workplace and you have, I got a distribution check that came in, sitting over on my counter right now. I'm just going to deposit it. And it's like literally all the time I'm having all these different, I'm not talking about you don't have to have like tons of money coming in. It's like $200 here, $500 here. I'm not talking about $10,000, you have to get coming in right away. Working with you guys have an affiliate relationship, and you can work with other people that if you recommend them, a lot of times they'll pay you for recommending their services. That's an income stream. But with real estate, having these different income streams coming in, it lowers the stress. You feel better. You treat your employees better. You treat your customers better, your patients better. I love it when somebody comes in and they're like, they're busting their butt. They got 2 jobs. They really want the dental work and they just can't afford it. Well, if you have multiple income streams, guess what? Okay, I'll do it for free. But if you're stressed out all the time, you're in a lot of debt, and you're so focused on that one income stream, it's hard to do that. I'm not saying you can't, but it's hard to do.
As you've thought about the income streams and specifically real estate, like to you, like what are the main differences between real estate as the income stream compared to, say, dividends from stocks or, mineral rights or something like that? Like, why real estate? Why is that unique to you, and why did you choose that?
Well, I didn't really know much about mineral rights or dividend stocks. I was just looking, why reinvent the wheel? I'm looking at what do the wealthy people do? What do they invest in? They own real estate. Okay, I'm going to own real estate. I want to emulate them. You got somebody that's jacked up in the gym and they're cut up and all this. You go over and ask them, dude, what do you do? What do you eat? What supplements you take? Why try to reinvent the wheel? That's why real estate. And then luckily, I didn't know all the other benefits that went along with, again, the tax benefits and how it ultimately can, if you set yourself up right, i.e. real estate professional status or a short-term loophole, it can affect the taxes of your W-2 if you work with a firm like yours or others and play the game right. So there's multiple other benefits to it just besides the money. But for me, to answer your question, the simplest way is I just wanted to do what the wealthy people did.
Hey, are you tired of working with generalist CPAs that tell you can't use the real estate professional status, the short-term rental loophole, or cost segregation studies? Or worse, have no idea what these things are? If so, it's time to elevate your game and work with a CPA firm that gets it. Here at Hall CPA, we worked with thousands of investors, helping them save millions of dollars in taxes through proactive tax strategy and planning, tax preparation, and outsourced accounting solutions. So if you're ready to elevate your game, make tax filing painless, and save thousands of dollars in taxes, what are you waiting for? Just head on over to www.therealestatecpa.com/podcast to request an initial consultation today. We are accepting clients for the 2023 and 2024 tax years, so if you're looking to make a change, you have nothing to lose. Again, you can request an initial consultation by visiting www.therealestatecpa.com/podcast. We look forward to hearing from you and learning more about your situation and how we can help. But for now, we'll dive right back into today's episode. It's true. Tony Robbins always says you find success leaves clues, and you find someone to model and you do what they do and you'll get those results, right? So definitely no need to reinvent the wheel. You want to be successful, look at what successful people are doing and model that. Now, so for doctors and busy professionals, I know there's a lot of people who listen to the show in different fields, and we're all busy. People have families and everything going on. What type of real estate investment would be a good choice for these people who are extremely busy, maybe have the money, but don't necessarily maybe have the bandwidth or know what to do first?
That's a great question. And that's probably the top three questions that I get. That one. Should I do active real estate or passive? It just comes down to your situation. You have to sit down, especially if you're married, sit down with your spouse and say, hey, do we have the time to do this? I would recommend that you start off passively, because your biggest wealth building tool is what you spent your time, energy, and money to get. It's your profession. So let's say you make 300 grand a year, but you start taking, and I see this all the time, and I get people messaging me all the time. Hey, Jeff, I'm out looking for different properties, or I'm online, I'm cold calling people. So they're taking their time away from their biggest wealth building tool, and they're diverting it over somewhere that they don't know what the hell they're doing. Instead of get really good at your profession, the more money you make, the more you can invest. And there's so many different ways to invest passively. I love real estate syndications. I like RV parks and mobile home parks. There's a lot of reasons why. We can get into it later if you want, but I've done everything. I've done apartments, short-term rentals, self-storage. I've done it all. And that's ultimately what I landed on. And I started passively. And when you start passively, you can learn from the syndicators. You can learn from the general partners to teach you. And then now that I've gotten 7, 8, 9 years of experience, now I'm actually going off on my own with one other person, and we're buying mobile home parks in my area. But to me, it's a lot easier process to start, almost like you start in kindergarten and then you get to the point where you graduate high school. Well, you don't start senior year of high school. You start with learning your ABCs first.
No, that makes a lot of sense. And I have to say, so I started off real estate investing passively as well. I jumped in with a mentor. He showed me the ropes. I was an LP, showed me behind the scenes, taught me the game. And then eventually I did a general partner deal with him as a sponsor. And I wouldn't have gotten to that point if it wasn't for that initial passive investing experience. So definitely, it helps reduce your risk because you're not responsible for the day-to-day management of everything, and you can learn the ropes, to your point. Question that I had for you was, you mentioned you've seen it all at this point. You've done apartment buildings, you've done self-storage, you've done these various different things, short-term rentals. What made you land on mobile home parks at this point?
Well, mainly we're in mobile home parks and RV parks, and it's pretty similar. I'll start off with mobile home parks first. I live in Louisiana. There's a lot of trailer parks, but you look at the nation as a whole, it's expensive to live. I mean, apartments are expensive. It's really expensive to buy a house. So there's this huge shift to affordable housing. And you got, like, at the very top, houses, and you go down and you got mobile home parks, and you probably got living under the bridge underneath the mobile home park. I mean, it's almost the lowest cost housing there is. Some of our mobile home parks that we have here, the lot rent's like $200 a month. I mean, that's $50 a week. I mean, it's freaking nothing, So this is a typical supply and demand. It's a huge demand, but a very limited supply, because they don't make mobile home parks anymore. Most cities, most towns, they don't want them because, a lot of times they have that stigma, that, blight or whatever, and they don't collect a lot of taxes on them. So if they have 50 acres, they'd rather have some big development come in and build to get taxes and jobs and all that instead of a trailer park. Supply, demand, cash flow, as you know, for both RV parks and mobile home parks, high depreciation. And I had Brandon Hall on my podcast, on my YouTube channel, and I was asking him about that. He was like, yeah, that's RV parks and mobile home parks have like the highest depreciation because of land improvements versus apartments or whatever. Now for RV parks, this really started happening after COVID because everybody was cramped up. They were tired of being on, lockdown. So they went out and bought an RV and started camping. And you can actually look at the trends. It keeps going up. And the RV parks and mobile home parks, but especially RV parks, they're still mostly owned by mom and pop people. They've been doing it forever. They haven't really kept up with the times. A lot of it is antiquated, like trying to book, on your phone. And that and short-term rentals, it's very similar because it's all about getting the reviews. It's all about making it really easy to book your stay. And so we can go in and we can buy these RV parks from these people. A lot of times we can get seller financing, which is great because we get a lower interest rate, but it's also great because it gives the seller, maybe they don't want to completely retire. Maybe they want to get another check for 5 or 7 years. Well, seller financing, we're paying them every month, for this. So they're kind of having a little transition out. High depreciation. And there's 3 types of tenants in an RV park. The one you're most familiar with are the transient or the nightly stays. You can charge the most. So if you're having an event or function, if you usually charge $50 a night, you charge $100 a night. Then you got the people that work in the area that stay weekly and monthly. And then a lot of the parks that we own 24 parks now, it's long-term people. Some of them, they're like permanently. They have their RV there and you can't even, it looks like a trailer. They have a flower beds, they have gardens, they have a front porch, they're there to stay. So even if you're in an area that's seasonal, you still have the long-term people and you still have the people that are working there. Then you have all kinds of different income sources. Unlike apartments, you have ice, propane. We just bought a RV resort pretty much in Shreveport, and it's got lakes, it's got pools, it's got lazy rivers, it's got arcades, it has self-storage, boat and RV. So, it's got all kinds of different ways that you can add additional income streams to that. Versus the other asset classes, you can't do that.
That makes a lot of sense. Are you syndicating these, or are you doing it all with you and a partner, or how do you end up financing these deals? I know you mentioned seller financing, but the equity portion, you doing that all yourself, or are you syndicating these deals?
I actually had a dentist introduce me to my now business partner, who's a real estate attorney, and we formed the Blue Metric Group. You can go to the bluemetricgroup.com and see our portfolio, and we're syndicating these deals. And in 2 years, we've gone from 0 to 24 RV parks to now over 60 employees, just from the expansion of everything. And most of the deals that we're picking up, I would say 95+%, they're not even on the market. We're just cold calling. We got somebody that cold calls. And as you know, that's how you make your money. You make your money in real estate on the buy. If you can buy it right. And most of these were buying at around a 9 or 10 cap minimum, doing real well, versus apartments that are what, 3 or 4 cap,
It seems like RV parks and mobile home parks, almost like the diamond in the rough, quite literally, in the sense that it's just an overlooked asset class. And to your point, supply and demand is everything. That brings me to an interesting question, and I don't expect you to whip out a crystal ball or anything like that, but I've been getting asked this question a lot lately, too. Where do you think we are in the real estate market, in general, perhaps overall, and then specifically supply and demand obviously plays a big factor, but for mobile home parks and RV parks, where the assets you're investing in currently?
Yeah, I'm in probably over 15 multifamily syndications, and all but one I only have one of them that's paying distribution. Everybody's held, just stopped. And that was really got me started looking at other asset classes. The demand's still there. We're still finding deals. It's still growing. I do think apartments are getting ready to start coming back because there's so many of them going into default now and foreclosure. And I get emails asking about, hey, we got this thing. It was 50 million. Now it's 20 million. So there's deals out there now. So I think they're all getting ready to come back, to increase. But with the apartments, the taxes, especially the insurance, some of the insurance policies, claims that has happened. Like, for instance, I was in a deal, there were no claims filed, and the insurance went up 4 times. You can't make your payments. You can't pay your investors, So if your insurance payment is $5,000 a month and they tell you, hey, it's now $25,000 a month, it's hard to make your payments. It's hard to stay afloat. And that's what's happening across the board. And with mobile home parks and RV parks, it's like dirt cheap to insure. It's like very, very low maintenance. It's very low taxes. So I love all of that about it. And like you said, it's like a diamond in the rough. People just don't think about, when they go, hey, let's get into real estate. They're thinking of what? Apartments, single family homes. They're not thinking of trailer parks and RV parks. I love it,
I know we talked a little about before people going active versus going passive and time constraints. So for someone who's going passive, right? Someone who says, you know what, I want to get into this space. I want to learn the ropes. I'm going to go into the passive route first. What are your recommendations for them to get started? What factors should they consider? How can they find passive investment opportunities? What would your advice be to that person who wants to get started along that path?
Yeah, and I'll answer the question because this is what I did. So I'll just tell you what I know best is get out, network, meet people, meet limited partners, meet general partners, the best place to go. There's several passive investing online Facebook groups. There's passive investing meetings. I went to a couple in Dallas when I first started. And what's great is you can meet passive investors and then they can sit there and tell you, hey, see that guy across the room, I invested with him. He's great. You need to go talk with him, or, stay away from that cat. He'll screw you over or whatever. And it's not that big of a space. So you start hearing the same names to avoid over and over again, and you hear the same names to invest with over and over again. And then once you get that foundation, make sure you're educated on how a syndication works. There's tons of, YouTube videos, blogs, Facebook groups. There's no reason why you can't do it. I've learned everything I had online to get started. Then I just started networking with people. I would start there. And then once you get comfortable enough and you find a good deal and you got other people that they're going in that deal, do it. Because procrastination it kills wealth building. I got people reaching out to me that like, hey, Jeff, I talked to you 3 years ago and I still haven't invested in anything. I'm like, what are you waiting on? If you're that scared, then just stick with the stock market or whatever you're doing. Do something, whether it's mutual funds or don't just, there's a phrase we have here in the South. It's, shit or get off the pot. If you're not going to do anything, then do something else, because real estate isn't for everybody, and if that's not for you, that's fine. And there's nothing wrong with that. But if you're going to commit to something, you got to take action, because investing in like a little syndication or something and then waiting 3 or 4 years later and wondering, well, why haven't I built wealth yet? You have to be consistent, just like basketball or whatever. You have to practice every single day. You have to be consistent with it in order to get better.
Yeah, it's going to require some risk too, which a lot of these people aren't really willing to take. So I get that too. And as you think about, one of two things that has popped in my mind. So for you, Jeff, do you think there's an income threshold where, hey, once I make a certain amount, I should just only do passive syndications? Or is it like amount of money that I've got ready to invest? Or is it like a combination of the two? Talk to me about like, yeah, let's maybe just start with income. Like, hey, you mentioned 300,000 a few minutes ago. Once you make 300,000 or more, you shouldn't even be messing with active investments. Talk to me about how you would think about that, or, talk to a potential limited partner and when they should start just looking at passive.
Yeah, it's a good question. And one of the first questions I ask my new coaching clients is one that they can't answer. And it's simply, what do you want? And they're like, what are you talking about? I'm like, why do you get up every single morning and go to work, commute, do whatever you do, and then come back home and wake up the next morning and do it again? And 99% of the people go, I don't know. That's just what I do. You have to understand your starting point, what you want. Then from there, you have to look at, where do you want to go? If you can't answer those two things, I don't care about your income, I don't care about whatever, I can't help you. And we've been so brainwashed by financial advisors and others, not all of them, but the majority of them, that you have to work for 30 or 40 years. You have to do a 401k. You have to pay me 1%. So anytime you call me, I'm going to be on the beach or wherever, but you're still working like a good boy and you're paying me, whether you make money or not. That's the best job in America. If I could do it all over again, I'd probably be a financial advisor. That's just the best job ever. It doesn't matter if you make money or not, I'm still getting paid. It's kind of like, it doesn't matter if my surgery is successful or not, I'm still getting paid, and that's just accepted. That's just how it is. So if you don't know where you are and where you want to go, then I can't help you. But once you do learn, okay, I'm 32 years old, I'm a doctor, I'm making $350,000 a year. At 45, in 10 years, I want to get to the point where work is optional. Now we have something to work with. Okay, well then let's start with the end in mind and work backwards. Okay, how much money do you want coming in? Do you want to be taxed? Does it matter if you're taxed or not? Do you want to deal with tenants? So there's all kinds of different things that you can ask. But again, it starts with those two things that I just discussed.
That makes a lot of sense. And I know you read a lot of books, and I totally agree that trying to figure out why is one of the hardest things people have to
It is. It
Are
is.
there any particular books that you would recommend for people to find out their why?
Start with why would be one of them. The other one would be The One Thing by Gary Keller, because we're so torn, especially for me. I'm running all these different businesses, and I'm like, I'm over here, then I'm over here, and then this person emails me, this person calls me, and it's like, but if you have one thing that you're focused on, like right now we're raising money we're at the end, like 90% filled for a project we're working on. That's my one thing. So if somebody asks me to do something, or I get all these requests in, I just say, okay, is this going to help me get to my one thing and complete it or not? If not, I delegate it or I put it off till later and stay focused on that one thing until that's done, and then move on to the next one.
Yeah, that's a tremendous concept. One of my mentors recently told me, he goes, how you get everything done? You focus on one thing at a time. There's multitasking. Most people can't do it. So if you're doing something, you do it until you're complete. If you try to, bounce around in between tasks, I can attest to this. It doesn't work that well.
Think about when you're at your computer right now, and if you have 10 tabs open, you're going back and forth. You're like, oh, let me go answer this email. Let me go check at this stock. Let me go here. Versus you got one tab open, your cell phone is in your truck, and boom, you're so you can get so much more done. But people think that because they're multitasking, get more done. It's not true. And there's tons of research and science to back that.
We were talking as a firm like a few weeks ago, and one of the concepts that we were talking about was the Ohio method, which stands for only handle it once. So it's like you have something that comes in, you touch it once, you take care of it. Like you said, you either get it done, you delegate it, or you decide when you're going to work on it. So kind of the same thing as far as being efficient with your time. I think that's a great concept.
So I know we talked about a lot today. We talked about how to get started, how to choose which route is for you, what books to read, things like that. I guess right now, where we are, we're currently in July 2024. What's your biggest piece of advice just for real estate investors in general? I know it's a really open-ended question.
I would say to get started, take action, do something. Whether that, if you've been procrastinating for years and you haven't invested in a deal, invest a deal. Whether it's, I want to get started, I want to learn about real estate, start by reading a book. Start by getting somebody to mentor you. Just start. Just do some. Just kind of like the Nike slogan. Just do it. Just get started, because the motion, whatever the thing is, at rest until you put force on it, and then it just keeps going back and forth. But you have to start that motion going, and once it does, you never know what's going to happen. You never know who you're going to meet. You never know. I had a dentist I joined a Facebook group, a free Facebook group. It was Real Estate Investing for Dentists. I joined that group, and because I joined that group, another dentist reached out to me and said, hey, me and another guy own 2 RV parks together. We're killing it. Do you think any of your investors would want to invest in it? And I don't know. I said, start the ball rolling. Because of that connection, we now own 24 together. And all it took was me joining that free Facebook group. So just do something, just get started today.
Yeah, I couldn't agree more. There's a leadership principle in the book by John C. Maxwell, the law of the Mo, I believe it is. It's the law of momentum. And,
it must be yeah.
And there's a book about Warren Buffett's life, The Snowball Effect. And the concept is exactly what you said. You get the ball rolling, and it kind of snowballs into this much bigger thing over time. But it all starts with that one step, as they say. So great piece of advice to get people to take action.
There's another in the One Thing book talking about what you just said, get the ball rolling. There's an experiment, and they did this. They actually tried it. And I don't remember what they ended with, but they started with you know how you line up dominoes and you push one and, so they started with a domino. And then what they did is they had something lined up behind it. And each time they lined up something behind it, it was double the size. Let's say one was 3 inches, 6 inches, 12 inches, blah, blah, blah. Just starting With the domino, they got to the point where that one domino eventually knocked over a 1-ton stone tablet. And they showed it. They actually showed the experiment, and they talked about that in the book. And that was all from just getting started, knocking over that one domino, and that had enough force to do that. So that just shows you the power of just getting started, and you never know where it's going to take you.
Yeah. I've read that book, I think 3 or 4 times on Audible. It's really helpful. And especially for anyone who's maybe like, where do I start? What do I do? Like that for me has been a big mindset book. It might not be just like, hey, go do this, right? It's not like an action step book where it's like, here's how you do this. And then step 1, step 2, some parts, maybe it is. Yep. But before we move on, Jeff, too, maybe to kind of wrapping up our time, as you maybe talk with LPs, if you were to counsel them, what in them looking for, hey, I'm a doctor, I'm a busy professional. I want to keep my time focused on my profession. I know that I want to invest. I'm thinking that I want to invest that into real estate to move towards financial freedom. I believe that that's going to be a piece of my income streams. As they're looking to invest, what things as they're looking for a partner or a fund, like a general partner that they're going to be looking to invest with, what would be the one factor, the one thing that they should be looking for in a GP or in a fund to say, this is really going to push me over to invest with this person?
I think most people can relate to this that invest in the stock market. Dave Ramsey talks about this a lot. Is he recommends investing in a good growth stock mutual fund with a long track record. And the longer the track record, the better, because if you have one right now that, it made 32% and it's got Tesla, Google, and Facebook, and those 3 stocks are killing it. But then you go back 10 years and it was only like 3%. Well, then, that's a big difference. So if you got something that, any investment, including the sponsor, so the longer track record that they have, there's a bunch of different things, but you asked me one thing, I would start with the track record.
That's the most essential part of investing in a syndication or an LP, in my opinion. So I've invested in a few passive investment deals, and that's by far the most important one. But I will say this, that I made an investment, not going to say what type of investment, and I'm sure we'll talk about this in another time, where everything was peachy green for a long time, and things went south. So sometimes, while track record is super important, totally agree, it's like number one. But you have to sometimes dig deeper than that, right? You want to do a little bit more due diligence, see what's going on currently within the operations, because people could have a phenomenal track record, but if you get into the thick of things, perhaps what's going on in the current environment may not be, or what's going on in their current operations may not always be reflective of that. So I totally agree with that. Like 9 times out of 10 or 9.5 times out of 10, track record is going to be really telling, but not always. But before we wrap up here, I know you mentioned before you help a lot of people. I know you have a ton of resources out there for people, YouTube channel, website. Where can investors access some of your resources, tap into all the knowledge and experience that you've gained over the years? And perhaps if they wanted to invest with you, where can they find that out too?
I appreciate you letting me share that. The easiest thing is to go to my website, debtfreedoctor.com, and that has a free passive income guide. If you're just now getting started, you can download it. It's a free PDF. This has the YouTube links, the Facebook, and the Instagram links. So it's all on there, debtfreedoctor.com.
We're going to drop that in the show notes for everybody. And just before we wrap up, of course, if you are tuning in, we are always accepting clients. If you are looking for a new CPA, or perhaps you never worked with a CPA before and you're in the real estate game, we'd love to learn more about your situation, how we can help. You could do so by visiting www.therealestatecpa.com/podcast and fill out the brief form, and we'll reach out to you with next steps. Looking forward to learning more about you, what you have going on. Again, Jeff, thank you so much for taking the time to come on the show today, sharing your knowledge and wisdom with all of our listeners. We'll go ahead and drop, again, all of that in the show notes. And thanks again, Jeff.
My pleasure. Anytime.